Welcome back. You're still tuned into Trading Hour. For the market, we're still seeing a good 90-point gain, so around 0.5% on the index, looking extremely steady there. The mid-cap index has moved even higher, a full 1% up on the mid-cap index. But let's get you another corporate conversation going. We have GNA Axles, which is in focus. The company delivered a strong fourth quarter with an over 200 basis points expansion in the margin. In fact, even on the revenue, it has managed to top its full-year guidance. So they'd guided for around 20%. They've clocked in 24% in terms of a revenue growth. So to discuss the quarter gone by, as well as how FY24 is really panning out, we're joined by the GNA Axles MD and CEO, Ranbir Singh, to take some questions now. Mr. Singh, thanks a lot for joining us. This is Pavitra. So, if I can just begin by asking you on the revenue front itself, you've already crossed your own guidance. Can you tell us what you would expect going forward now? I know the last time we spoke, you said around 7 to 8% in terms of revenue growth. But considering that Q4 has already been so good, would you look to up that guidance?
Pavitra, thank you very much for inviting me today on CNBC. As so far as top line growth is there, even last year in the beginning, the total visibility was not so good. But fortunately, our all segments like off-highway, CV, and export in Europe and America, everything has performed very well. So we were able to surpass our own guidance. So even now, if you ask about the year 2024, I won't be able to give you full guidance. So because it is too early, it is too early to say anything about the whole year's market trend and the demand.
But Mr. Singh, you are approaching, I think, peak revenues, right? In our last conversation, you indicated that the peak revenues for the company, if you operate at 100% capacity, 1750. Is that correct?
It used to, but at the same time, I have given some guidance about our capex also. So whenever our capacity is being utilized over 80%, then we start investing on the capacity enhancement. Even now, because now we are sitting at over 80% utilization, but simultaneously we are doing a lot of capex from internal accruals mainly. Now we have planned 200 crores capex for next 3 years, so around 70 to 80 crore per year to increase our capacity by over 2 million pieces per year.
Okay, but this capacity comes on stream when? After 3 years?
It is on quarter-to-quarter basis. It is enhancing.
Okay.
Because on a basic raw material generation like forging and all, those capex already we have done and simultaneously going on where the long lead times are there. But in the machining and finishing on quarter-to-quarter basis, we are investing.
Mr. Singh, good morning. I just want to come back to the main point because you've ended a very strong year, a very good quarter, and yet you're not really sort of talking much about the future. Why is that? Is it because you don't have too much of visibility in the North American market, which is where you're doing a lot of your truck exports? Do you fear a sense of slowdown?
Surabhi, good morning. Actually, our dependency is on the four segments, that is off-highway domestic, CV domestic, and LV domestic. And apart from that, in export, we are depending upon European and North American market. At this moment, North American market is taking some correction, that is 10 to 15% demand reduction is there in first quarter. But I can't say immediately about the next 2 quarters. So it is very difficult to say. Suppose that dips by 15%, so we have to cover it from the domestic market or some other segments to match our existing sales.
Oh, got that. So let's talk about the other segments, and we really appreciate you giving us this detail. So North America, as you're saying, there's about a 10-15% demand drop right now. What about the other markets? What about Europe? What about the domestic space here, India?
If you consider exports in Europe, Europe is very much stable. But we are very hopeful North America will again pick up after a quarter. South America is performing very well, Mexico and South America. And on other end, Europe is stable. In domestic front, CV market has performed over 30% and the tractor market has performed over 10%. That is 100,000 tractors they have produced more in domestic market and they were able to sell it. Tractor growth is low because the base is very high. Already tractor market has crossed 1 million mark tractors. So even 100,000 addition of tractors year-on-year basis is quite good, and we are holding 75% share in the tractor market. That is giving us a good, a strong hope about our. So we will be able to maintain. That is, our guidance is around 8 to 9% again for this year.
So you're retaining that. That's 8 to 9% overall guidance, revenue guidance for FY24.
Overall, after the correction of North America and a local high demand.
Sure. So 8 to 9% for the year.
Okay, earlier your exports used to be around 60%, right? And 40% domestic. Is that level still what you saw in this quarter as well?
This quarter, it is going to be 55% export, 45% domestic.
Okay. And what about margins? What's the outlook on margins?
Margins are stable for last couple of years, and we are able to maintain between 14.5% to 15%.
And that's something which will continue. Thank you very much, sir, for joining in. That's GNA Axles guiding for an 8 to 9% top-line growth, stable margins. They've got a capex in place, and they will be spending 250 crores via internal accruals over the next 3 years, as the company has been achieving more than 80% capacity utilization. Get into a break.